5 points in an hour without taking too much risk whatsoever. I'm Jeff Cooper, creator of the Hit and Run methodology and author of the Daily Market Report. If you like what I show you in this video and this kind of approach to the market interests you, please like and be sure to click on the link below. Let's go to the charts. NEWR is a go-to glamour, a leading general that reported earnings before the open yesterday, February 7th. This is a 10-minute chart of EWR. You can see the gap down and the spike from, it looks like around 105 down to 97. And before the market opened, we alerted members on our private Twitter feed that NEWR looked like, New Relic looked like there was support down around the 97 level. Let's go to the dailies and I'll show you what I mean. The rising 20-day moving average was at the 97 level, and this was the first time that NEWR was going to pull back to tag 97 as well in this rip from the December lows. So the first time the market does something, usually it's an inflection point and worth taking note of. And we flagged this level and put it out to members before the open. And I'm going to show you three simple steps, three simple strategies combining this holy grail, which is a pullback to the rising 20-day moving average, an opening spike low, and an earnings reversal that shows how the stock went from a probe of the 20-day just below 96 and bounced all the way up to 103 in an hour. So let's take a look at the 10-minute and you'll see what I mean. So here's the gap down, shows the push down to just below 96, and as NEWR started to reclaim the 20-day moving average at around 97, we alerted members to buy it. Now, not all setups are created equal, including a holy grail, but when multiple pieces come together like this, the odds favor a successful trade. So you had the opening spike low. Stocks that are in strong uptrends often bleed back into the prior day's range on an opening spike low. Down opens in bull markets usually find bids. This is where the buyers are likely to buy. Conversely, in bear markets and downtrending stocks or in bear phases in stocks, up opens usually invite sellers to trim and lighten up. So this was the first pullback, as I noted. This was the first pullback to the 20-day in this strongly trending move in NEWR's strong uptrend. And the first time a stock does something, it hasn't done it in a long time, it's worth taking note of. They say never to catch a falling knife, never to try to catch a falling knife in the market, but rules are made to be broken if you know what you're doing and you have a good reason to do so. So there are three reasons I showed you to do so here. The pullback to not only the 20-day moving average, but the previous breakout point right here. You can see this broke out right here after this consolidation, the opening spike low, and the fact that NEWR was reporting earnings, and in this case, the bulls were likely to circle the wagon at support and not let the baby be thrown out with the bathwater. So combining all these elements, combining all these factors, set up a good risk to reward entry right here. And you can see we ended up selling the balance of our position as it went back up towards the open at around 102. It actually went all the way up into the midpoint of this opening gap down the gap window, and then came down to the midpoint of the range on the day. So that's how you can go from 0 to 60, locking in 5 points. Hope you enjoyed this little lesson, and if you did so, please like the video.